Hello there. Ed Stacey joins us from Capital Network now to talk all things Innovaderma or Innovaderma. I'm not quite sure how to pronounce it, although I did interview Kieran Callan at the beginning of the week. Ed, how do you say it?
Innovaderma.
Oh, we're both different then. All right. Anyway, they had their interims out last week. Just walk us through why they were significant.
Yeah, so we think this could be a real inflection point for the company, actually. If we just look backwards a little bit at what happened over the last 6 months, there's two big products, obviously, that we're concerned with. Skinny Tan, the self-tanning product, and also now a bit more of a general beauty range, Skinny Tan. That had some problems during the last 6 months with their direct-to-consumer channel. So this is their selling over the internet. And that's to do with new privacy and so on, and Facebook changing algorithms. So it's been harder to sort of push in the way that they used to over the internet. So you had a dip in those direct-to-consumer sales for Skinny Tan. Skinny Tan on the high street still doing okay. And then the second product line, in fact, Skinny Tan growing through the high street. The second product we need to talk about, Roots Hair Care. So this is a newer product for Innovaderma. That's a newish product and growing very, very strongly. But not strong enough to offset that Innovaderma direct-to-consumer. So that's what had been going on. Now, all this had been announced already in a trading statement a couple of months ago, so no surprises. What I think is new, though, in these interim results is some more concrete evidence that things have really turned the corner. In the first 6 weeks, more than 30% revenue growth, and also some new sales channels really opened up now, both for Skinny Tan and for Roots. So a lot of evidence there that really things have turned the corner and we're back on the growth track.
And when you say sales channels, of course, you're talking about the Boots deal, which I think is 1,300 separate shops, and it's going to be launched in March, isn't it?
Exactly, yes. So that's about half of the total number of Boots stores they're launching. That Skinny Tan goes into Boots. But they've also got new channels for Roots. During the 6 months, they'd signed deals with Tesco and Boots. And an expansion of the number of Superdrug stores that Roots will be going into. So actually, if you look at the number of high street outlets, it is doubled for both products, where we're at now compared to where we were at the start of the last half. And then you've also seen, though, this direct-to-consumer channel in the first 6 weeks of the year, as well as the group revenues growing 30%, specifically the direct-to-consumer grew by more than 30%. So actually it seems like direct-to-consumer and retail, you now have plenty of drivers for growth. And as you say, that big Boots deal actually kicking in March, so that could be even a further acceleration of that growth. So absolutely, it looks like put it all together and you've lots of reasons to believe we're right back on track for some revenue growth.
So what are your thoughts then, Ed, on the current valuation for the company? Is there more of an upside?
Yeah, absolutely. I mean, there's been a little bit of a bounce in the share price, but if you look at how it's valued now, it's still less than 1 times revenues, and it's still less than 10 times PE ratio. Now, in the medium term, we would expect this company trends to strong double-digit revenue growth and mid-teens EBIT margins or operating profit margins. And on those kind of metrics, you expect really the shares to trade on above 2 times revenue multiple. So I'm talking about 100% upside from where the shares are now. Of course, there's a lot to ask in the next 6 months, that this growth that we've started to see come through continues and those retail channels delivering success. And then there are further products in the pipeline as well as you look further forward. But nonetheless, I mean, yes, there's a lot of moving parts, but it's a lot of valuation upside if they can start to deliver now, which seems to be the case.
Ed Stacey, always good to hear your thoughts. Analysis from Ed Stacey there from Capital Network. If you want to hear Ed's full report, or rather read Ed's full report, click on the I in the corner of your screen.